So who's it going to be? Is it going to be the bulls or the bears to take back control later on today? We'll have a look at the Monday range trade opportunities for today. We'll also talk about the confirmation of a very bearish signal. Unfortunately, hate to be the bearer of bad news, but this is the reality. We have officially confirmed a bearish engulfing candle on the high time frame. We were looking at that yesterday on the 5-day chart, and you can see we got that close. I told you yesterday there was about, I think, 12 hours left at the time of doing the show before getting that confirmation, and we got that bearish engulfing candle. It is so expect that there will be probably a series of new liquidations coming into the market. Watch for those liquidations as price does come into key support. If it lines up with key support at the moment in time when the majority of the longs get liquidated, that's probably a strong indication that you'll print a major bottom over there. What are you looking for when it comes to high leverage liquidation levels? Well, you're looking for in the region of $1 billion or more worth of liquidations on 24-hour the 24-hour rec levels, which is 323 million right now. And you can see the last time that we saw that was over here. We had 883 million, and then the time before that 922 million. So you often find local lows or major pivot turning points within the market when you put in those types of sizable liquidation. So look out for that. That's something that should be coming up in the coming days' time, following that bearish engulfing candle. And if you follow the textbook pattern, remember, this can be indicative of trend reversal. Now, I'm not necessarily calling that. We could still be printing high lows on the higher time frame, but nevertheless, if you wanted to trade something like this, it's pretty easy. You would be short with a stop loss slightly above where that bearish engulfing candle took place, which would mean 124,700 or 124,600. There we go. You can put your stop loss over there. Personally, I'm not a fan of shorting within confirmed bull markets, which timing wise, that is still the belief that even if we do put in a deeper correction, it's unlikely that the cycle is over. So I want to be clear on that. I think even though you got the bearish engulfing candle over there, unlikely that the cycle is over, but you could go in for a deeper correction. Your areas of interest, and we'll look at the various different levels of confluence on the different time frames, is going to be first and foremost $110,000. That's going to be a significant level, and thereafter you're going to be coming in possibly you could sweep $100,000. You do have confluence of the middle of this parallel channels midline. You have that strong horizontal, which was your previous tops. You have your 30 moving average, which is the purple one over here. So there is confluence over there, but the first line of defense is going to be that $110,000, $111,000 region. And the reason why is this, right? If you look at the overall trend that price had been following, let's use our highlighter over there. You had your low, you had over here on the trend line your high low, you had your next high low, which had beautiful confluence with that mid range, and now you've broken that, right? You've broken that level over there, so you've slowed down the trend. Remember, breaking a trend line doesn't necessarily mean straight reversal to bear market lows. It just means a slowdown of the strength of the overall trend. Like, instead of following that trajectory, you may need to pause and consolidate a bit, which could be a little bit of chop, right? Chop between as low as $100,000 and as high as at least testing this $111,000 region, which is going to be the mid-range level. And then you're looking for support to be found. And that's got that confluence, right, with this level over here. And then if you lose that and you go down to the range low, well, that's got confluence with sweeping below those previous tops and dropping below the 30 moving average on a 5-day time frame. So this will be a very, very big test for the bulls, right? This is going to be a big test area, price dropping down into this region. We expect that on the weekly time frame to be major support. And although it will reset the fear and greed index, which is what we're looking at over here, if you look at the fear and greed, and let's turn that all off, we actually back down into that 50 region, right? There it is, 50, which is create a lot of the orderly grind and runs towards the upside over here for Bitcoin overall. A lot of the just general trending moves, business as usual. When you're in that environment, you can see price continue onwards and upwards, which is why this is going to be a critical level to test and hold. If you do start to break this, things do become a little bit more shaky. And any time that you break below the stop and reversal indicators, which is going to be these little asterisk signs that are trending towards the upside, if you break that and you lose the 21 weekly exponential, which is your yellow line, well, that is always a cause for concern when it is in alignment with the timing cycle. Now, the question is, are we in alignment with timing wise where you would expect a potential top within the market, major top, cycle top, etc. And the answer is yes. Timing wise, the answer is yes, because we can actually have a look at that. If we do go through to the return on investment from cycle bottom, I just want to give you a very quick reminder. We've brought this chart up a whole lot, but we're following the purple trajectory, and we have crossed that $1,000 mark. We said that we believe this cycle could go 1,100 to 1,200 days, which means we are looking for a little bit more in the timing cycle, but it's close, right? It's very close, which means any serious bearish shifts at this point in time do need to be taken carefully or cautiously, right? You have to take it seriously, and you need to be aware and cautious on the long side that prices could go lower. So in alignment with those support levels with these previous tops over here that you can see marked by the white line running across the screen at that $109,000 region, we can line up the RSI. The RSI loves to find major support at that 50% level. So if prices do drop down and you come down towards that 50 region over here, and we'll change the color, it will get scary. It will reset everything, the yellow line that I've put over here. And this is where a lot of the major lows have occurred. So therefore, it would be similar to this environment, this environment, this environment. And if you do come down hard over here and you form a major low, that would probably be the final buying opportunity before finishing the crypto cycle, at which point I personally believe we will break this downtrend over here. This downtrend that's been governing the RSI lower and lower over time, which does look like a triple bearish divergence currently, but we'd expect that breakout to take place. And we know that when this breakout does eventually take place, it's just a question, in my opinion, of when. Do you know you go into the seasonal weak environment, reset over there around the 50 line, or do you just turn up over here and recapture this and rally? But we believe that based on historical data, it's not thumb sucking, and on historical data, when you cross this level and you break out on the RSI on the monthly scale can break above 80, which we're on the weekly now, but when you break above 80 on the monthly scale, Bitcoin could double in price, which would of course put Bitcoin into the $200,000 region. So we're waiting for that. If you still think that prices are going to go higher and this is going to provide dip buying opportunities where you can get long in the market, then again, Bybit have just opened this up. You can see we only got 29 squad members over here. If you want to join in, you can join in. This is the World Series of Trading competition, right? This is the Crypto Banter World Series of Trading competition. Use the link in the description below over there. Sign up to Bybit if you're not already signed up, and then click that link and join into the competition. I need to check what is the prize pool over here, but it's $10 million, right? $10 million prize pool. By joining into this team, it will be shared if we win this competition. It's not only based on absolute P&L, but also on trading volume. And we believe that we could at least win the trading volume side if all of you join forces with us. So there's the link. Join in if you want to join in on that. Let's continue with the rest of the analysis. So that $110,000 region is going to be vitally key. You can see the daily exchange volume is still rolling over, which means volume is diminishing. Remember, a couple of days ago, we saw that the Google search trends for altcoins or buy altcoins was at an all-time high. Beyond 2017, beyond 2021 levels, now it's dropped all the way back down, right? A full reset, right? So a complete fake out towards the upside. And this is one of the most reflexive things to look at, is the daily exchange volume in terms of understanding whether altcoins are going to catch a bid or not. Now, if this is moving towards the downside, generally speaking, the altcoins will suffer. So we need to see this find newfound momentum, but expect based on the seasonality. And I'll remind you, we went over a lot of data, and I'm going to do it again very, very quickly for anyone that missed out. If we look over the last 5 years of data, you can see October is actually where you find that seasonal low, right? If we go on to the last 10 years of data, well, you find that seasonal low on the 28th of September. This is comparing all the data over the last 10 years. When did the stock market find its seasonal low? Well, end of September over there. Let's go over the last 15 years of data. And if we look at that, well, the seasonal low was again the end of September, beginning of October, in this instance, the 2nd of October. Let's go 25 years of data, and you can see the seasonal low was found on the 9th of October. And then if we look over here, over the last 97 years worth of data, 27th of October and the 30th of September is a very significant point. So therefore, the 90-day seasonal period is August, September, October. And because we've already bucked the majority of that trend with the stock market actually putting in new all-time highs throughout August, it drastically shifts the probability that that seasonal low will form within this next 60-day period. Some point in September, possibly into October, with the base case being end of September. And that's why they call it Rectember, right? Rectember. Okay, so you want to be aware of that. What this simply means is you want to take a little bit more of a cautious approach leading into the next couple of weeks. Remember, this is not about being bullish or bearish, but it's about capitalizing on the opportunity that's before you. And this is essentially how you make a lot of money, is buy low, sell high, right? So if you had the opportunity to begin to exit positions and we do go much lower, that is going to be a great opportunity leading into September to buy for the final time before completing the timing cycle, which we believe should end again around that 1,100 to 1,200 day mark between these two spots over here, which should take you into the end of the year, possibly even the beginning of 2026. So those are the things you want to be aware of, right? And nobody times the top quite like a Bybit trading competition. So always keep that in your mind as well. Bybit World Series of Trading Competition, go and look historically. It's like these guys study the seasonal patterns because they know that they need to entice the traders to stay during the boring times like Rectember. Okay, so very, very, very interesting food for thought. Now, the other thing that we're looking at over here is the USDT dominance chart, which is also finding support at that very, very critical level. Of course, you do want this, if you're bullish, to put in a short-term bounce over here and begin to roll over. We can have a look at the lower time frames like the Monday range trades. There will be short-term opportunities over there. So do keep an eye out on that. But right now, you can see the market participants are dominating on the short side, and rightfully so, because in this instance, you have a bearish engulfing candle at a major top whilst capturing the top side of that parallel channel, right? That is therefore a logical place, if ever, to start to look for a short trade within the market. And that's what most market participants are doing. Bitcoin dominance, really fighting hard to defend this lower boundary of the parallel channel. We'll keep an eye on this. I expect, of course, if it goes risk off, this is going to bounce back into the trend, get back towards the upside, and then we'll have to look for some underside resistance over the coming weeks and months into that seasonally weak environment. If it, of course, goes risk on, this could drop down a little bit further. So we'll keep an eye on that. In terms of our grid trades, right? We had already planned for this. I just want to quickly highlight in terms of the grid trades, the 8x long trades over here, we had planned for prices to potentially pull back all the way towards our red lines. So all the various different coins that we're looking at, we said that if, ETH puts in a deep flush and you're viewing this as range high, range low, and therefore roundabout over here is going to be your mid-range coming in at about, we can work it out precisely. We don't need to do guesswork. I guess this is a technical analysis show after all, so let's throw it in pretty precisely for you over there. That would be like ETH dropping down to $3,100, sweeping into there. Our grids will continue to buy. So if I click on the ETH grid, here it is. Let's quickly click on the ETH grid. As you can see over there, we have already planned for this, for price to come down. We're buying over here, price rallied up, sold, and now it's beginning to buy back into this. So quick update, because I know there's going to be questions around this. We can go through some of the others. Let me just quickly off the top of my head see. So we got the BTC, the ETH, the XRP, Sol, Say, Sui. So it's most of the layer ones. We put 𝗕𝗚, Bonk, Pengu, NEAR, and Render. So let's quickly run through those just to give you a bit of an update over there. BTC will be buying all the way down to sweeping into that $100,000 region. So $99,000. We've set the orders down into that zone. I've just given you ETH, XRP. Well, we said this is the trading range. So you want to buy into the discount zone and you want to sell into the premium zone. So your discount zone in the yellow box, premium zone in this yellow box over there, buy if it comes down, sell into that zone, and you will make money. Solana, quick look at that. We said that we're good to buy Solana all the way down to about $100. That's the red line. That's the bottom of the range low. Discount zone, premium zone is above that. Anything above $180 is your premium zone for Solana. If we look at say we said we think could reject and come all the way back down to about 17, 18 cents, that becomes the buy zone. If we look over here at 𝗬𝗓, personally, I'd love to see 𝗬𝗓 find support at about $2.75, but I would be willing to buy with little wicks that drop down to about 244 over there. That is all the discount zone, so may need a little bit more time over there to reaccumulate. All right, what other ones do we have? Let's have a quick look over there. We had 𝗬𝗓, we've covered 𝗕𝗶𝗺. Let's go to 𝗕𝗶 and bonk. So in terms of the meme coin sector, there you go. 𝗕𝗶 already applying pressure. This is what you need to be aware of, right? If you're currently over leveraged in long trades, a lot of the coins, if Bitcoin even sneezes over here, never mind the stock market, guys. If the stock market sneezes, that's where that real seasonal weakness comes into play. But if 𝗕𝗶 sneezes over here, it's going to break this trend line. And if it breaks that trend line, expect to move down to 605, which is just above our red line over here at the bottom of the range low. And that's an area of interest. Okay. This is, you're going to learn a very sore lesson, emac DJ. You might have to stick to the discs for a little bit longer because if you think 99 is not possible, I don't know, you've got something else coming your way. It's not asking much. You understand that is only a 15% drop. To get to 99K is not much. Bitcoin in bull markets has put in 40% drops, right? 40% drops in a parabolic bull run. That is a possibility. So asking for 15% drop is absolutely within question over here. Okay, we got bonk over here. If bonk does reject, of course, you're looking at a move down to 113,000 is going to be the low region, and we are scaling into that region. Let me just quickly highlight this because this is not a matter of, fighting the bulls or the bears. It's just a matter of reality. And you have a very clear range. That's all you have to look at. You have a very clear range. You have significant levels of support that are all lining up. The first line of defense is going to be 110,000, right? You really want to see bulls defend that 110,000. So expect that if it does sweep down, it's going to put in a bit of a bounce. It won't happen overnight. You are probably going to bounce from that 110 region. You may even run back up to about 120. And then if you put in a lower high, that's what could take you down to that, sweep 100,000. Of course, I don't want that to happen. I would much prefer for everything to go up higher and higher over time, right? I'm not here being bearish or anything. This is just realistic based on 100 years worth of data that you're entering into a seasonally weak environment, which is always August, September, or October. And since we've already negated August as bearish, it's more likely going to fall into that end of September, beginning of October time period, where there's a bit of profit taking, and it should be expected. Where's my stock market chart? Let me see if I can quickly pull that into view over here. With the stock market, here we have it. Let's quickly pull the stock market into view. So you're talking about the stock market that has, of course, run significantly over here. Let's throw our stocks on, and we can look at, QQQ. We can look at the S&P 500. Let's go to ES1. There it is. There's ES1, right? So you have already rallied 34% without even putting in more than a 5% correction. Now, yes, this can continue, at least in my opinion, up 40%. So how far have we gone? 34%. You can go 40%. So you can go up about another 6% over here, and then you're going to meet this trend line. And then at some point, you're going to put in a deep correction. And for even the stock market, you have to use your fib level. You need to track this alongside. It's not out of the question for the stock market to pull back to the 50% level. So let's say the most optimistic case, this thing runs all the way to 6,800 without any pullback whatsoever. Then dropping from there to your 50% level would look like this. That is absolutely enormous. That will absolutely crush crypto, and that will easily drop crypto 15%. If we have a look at that as a measurement from there to there, that would be 15%. If the stock market pulls back 15%, is it not wise to think that Bitcoin will pull back at least 15%? When has Bitcoin ever dropped less, I should say, than the stock market? When has it ever done that? If the stock market dropped 15%, Bitcoin drops 30, 40%, at least 2 to 3 times, right? So Joshua Lee says, time to open some shorts then. No, I actually would not open shorts. To be honest with you, I would not open shorts despite this. And the reason why is because you're still in a bull market, right? The expectation is rather to taper off some of your leverage long positions. You can remain in spot positions, free up some cash, and reallocate on the drop. That's the plan, right? It's not about looking for the big short that's going to take you down to bear market lows, because that's not what we think is going to happen. All right. What we think is most likely is a little bit of a correction, scare people, reset that fear and greed that we're looking at. I've gone off that chart now. And to reset that, a big reset would be dropping below 100,000, sweeping into this low over here, which is just your range low, right? You simply just range bound. And remember, markets range for about 70% of the time, and they only trend for about 20 to 30% of the time. So therefore, you've already been trending over here. So it's very possible that you'll flip from a trend into a range. And the first sign of that happening is the break of the trend line, which you've just done. You've broken the trend line, right? So expect a little bit of a consolidation at the least over here. All right. Okay, we've been through a bunch of these. What else do we have? Let me know in the comments. Okay. Let's see. You don't understand risk management, Eduardo. I'm bearish, but I won't short. It's not about that. It's about, do you have confirmation of a downtrend in agreement on multiple different time frames? So if your weekly breaks into a downtrend, there you go. Is your weekly in a downtrend? No, it's in an uptrend. So you're coming into key support where there would be a high, low, and an uptrend. You're not going to short into the weekly buy zone. That is not wise. You need weekly downtrend, daily downtrend, 4-hourly downtrend, and all three of those are in confluence, and then you take the short trade, right? That's where I'll take a swing short trade. This is not the environment to do it. Would I take a low time frame short trade, based on maybe the Monday range? If we sweep the Monday low, this is part of the expectation, right? We'll get into that now. So we have the Monday range over here that's formed. We're sweeping the Monday low right now. We're below the Monday low in most of the coins. If we reclaim the Monday low, look for the long trade to the Monday high. Once you sweep the Monday high, you usually go from liquidity to liquidity. You sweep the low, then you sweep the high. If you sweep the Monday high, yes, then you can take a low time frame short trade. Stop loss goes above there, and then you can look for the pullback into the weekly supply, right? Or the weekly, other way around, the weekly demand, which is going to be your weekly buy zone, because the weekly is still in a bull trend, right? There is your, we're on a weekly chart over here. This is all going to be demand. You can't take a short trade right into the demand area. That's not wise. Low time frame, yes, it's all about the time frame you're talking about, but theoretically, any pullback into there becomes a buy. Do you understand? I know this can be confusing for people, especially if people are newer to the markets. That's why I really encourage you, join into Whale School, because this is where we can really expand on these topics and really give you multiple different scenarios. I try to cover as much as I can in these lessons, but they're not enough. You have to come to the workshops where we can really go at length for these types of things. So if you do want to join, remember, 𝗏𝗏 gains you your entry. As soon as you sign up, you'll get a pop-up like this that says claim your access to the course, and you're in, right? You don't need to do the whole rigmarole. Just use the link below to 𝗏𝗏. There it is. Click that, sign up, you're in. That's it. Claim your access, and we'll see you there. So, all right, let's continue. Let's have a look at a few things. I said I would address the Monday range. So let's address the Monday range then. Since we are on that. So let's go to Bitcoin. Let's drop maybe onto a bit of a lower time frame over here. So in the very short term, there's an opportunity for some long trades. This is what I wanted to highlight to you. We'll go even lower, like 5-minute time frame. So that is Monday low. So we haven't swept the Monday low yet. We've printed the Monday range, but this candle still happened on Monday. So what you want to be watching for example, on Bitcoin, and let's clean that up a bit, is you have a clear-cut range. Remember, you can get this indicator, Spaceman, BTC, key levels. It's free. Put that on, and then highlight where's your Monday high, where's your Monday low. So what we're looking at is this. If you come back down, break this Monday low, there we go. I would take this long without question as soon as you reclaim. But given that we have a bearish engulfing candle from a local high, whilst leading into a seasonally weak environment, I would rather wait for additional confirmation on the Monday range trade for the long. And what does that additional confirmation look like? It would look like this. Price needs to trade below. It needs to pull that 5-minute time frame 50 EMA down with it. And then it needs to recapture that EMA. So ordinarily, I'd front run this signal the second that you reclaim. I'd be looking for the long opportunity over there with stops below. But in this instance, you at least want to see this reclaim that 50, right? So if this 50 is coming down like that, you want to see price trade below, price trade above, and you want to see acceptance gained above that 50 EMA. Then we call this the deviation. You take the long trade over there. That's a little tick mark to say, congratulations, you're long. Stop loss goes below. You can trade this up to the mid-range where you take partial profits. Remember that $117,000 level we spoke about all of last week as a very, very key zone. Well, that's the Monday high, which is going to be, again, a big SR flip region. SR flip meaning support resistance flip. So you trade that long all the way to the high. The expectation would then be where the breakdown level occurred, you'll struggle to get above that order block, which is why you want to take your profits over there and even consider flipping short. If you look for an entry sign in the form of multiple wicks, you know, something similar to this that occurred over here, but at the top. So multiple wicks over there. Look for the short trade over there. Enter into that short trade. Stop loss goes above. And then you can trade that back down for possibly a move all the way into $111,000, which is that line over there. And if you lose that, then you're going down to about 100,000. Okay, so that's what you can do. These are shorter term trade ideas. And the theory will apply for any of the coins that you're looking at. So if it's Ethereum, here's Ethereum currently coming in for the Monday low. Sweep the Monday low, wait for that 50 EMA to be reclaimed, trade it back to the high. Let's go on this chart because it's cleaner, and I'll just show you risk to reward wise what that setup would look like, right? So risk to reward wise, you're basically looking for the long trade on the reclaim. There you go, long trade on the reclaim. You need to wait for the lower candles to print first, and then you can trade it to the upside, right? And then as soon as that's done, this is a decent move, 2.59%. Of course, that's what's a low time frame trade, and you need to use leverage. Then you can start to look to flip short. The theory is that price should struggle to get back above the order block that led to the breakdown. So you'd be looking for a trade that looks something like that. Already 2.51% down. And thereafter, if you go down to 110K, this becomes a very, very big risk to reward trade. All right. I hope that makes sense and that assists you. If it doesn't, please do join Whale School. We discuss this at length. What I'm actually going to do for you guys in Whale School is I'm going to create longer term expanded lessons and concepts on each of these various different things. For example, risk management, edited, pre-recorded, things that are evergreen that you can watch over and over and over again. And then you can get really up to scratch. So we can all be on the same level and we can talk, without having to handhold, like first grader, for example. We can just go straight to university. I don't know. Let me know how that sounds. That's the plan. Then in the workshops, we can go straight to university. We just immediately discuss the actual trade ideas and concepts. And we don't have to give you all the background info because you've already done that. All right. You're saying, but it did get below the Monday low. It depends on the time frame that you're talking about. That low that was swept was already on Monday. You can see over here, because I've set my time to UAE time, right? So that swept Monday, I think they're at 9 o'clock my time, which was still US time. So that was still part of the Monday range. Okay, so it depends on your time zones that you have set there. Okay, what else, guys? Let me know if there's anything else. I think that the message is clear. Let me summarize everything for you so that there's no confusion over here. In the very short term, you're looking for a sweep of Monday low. Then you're looking for a long trade off of that Monday low, which should trade up to Monday high. That trade up to Monday high will still set in a lower high. Why? Because if we zoom out and we go on like the hourly time frame, as you can see over here, that spike up over here, anything like that is still lower than the highs. Then you'd be looking for potential head short or at least a little bit of profit taking, which would then lead you into a seasonally weak environment for potential drop to 110 and maybe even sweeping that 98,000 or the $100,000 region. So dropping as low as 98 is a possibility. And then that becomes the end of the seasonally weak environment where you can reload up on spot positions and look for high prices. That is the summary. And that's going to take days to weeks to play out. Just to be clear, it's not going to play out today. You'll get your Monday long today for the short-term bounce, probably leading into next week sometime. You'll get your lower high, which is the short trade. If you want it, it's up to you. I don't like shorting Bitcoin, only in a confirmed bear market. And then, or any crypto for that matter, by the way. And then you're looking for a big buy the dip opportunity between September and August. Okay, that's what you're looking at. Let's quickly address Pengu. I see there's a question around Pengu. I think it's been one of the harder hit ones, but it's all still in alignment with the overall plan. Okay, You have a massive inefficiency. Again, guys, don't confuse where your demand zones are. You have a weekly fair value gap. Firstly, this lines up with a potential SR flip region. Previous resistance, price comes down, forms an order block, gets sent towards the upside. So for Penghu, that's one area of interest. And remember, you can work out that fair value gap over there. This is all going to be demand. How far away are you from that? Well, there, 30% down. It's all part of the plan. We've already layered out that grid so that if Penghu falls into this zone, we're looking to buy the dip over there. You're looking for this, right? Penghu falls down into there, higher low. You got a bit of a trend line over there. And then you're looking at reaccumulation and higher. Okay. So there we go. It's about creating multiple different scenarios and working out a plan for where things are going to go next. It's not about trying to be a fortune teller and always think that you're correct. It's about saying there's various different probabilities. Scenario 1, 2, 3. Which of these 3 scenarios looks the most likely to play out? And then you trade that plan. If it's scenario 2, take the trade. All right. That is what trading is. So it's up to you what you want. I mean, if you want the bullish only channel, I don't know. It's not my show. All right, cool, guys. I'm checking the comments. Let's see if there is anything else that you want. Let's see if there's any common questions that keep popping up over here. What if there's rate cuts? This is a good question. Actually, yeah, I mean, they keep readjusting that. That's the narrative right now. We'll see what happens over there. If there is rate cuts, you know, the market is probably going to price it in ahead of time, which is part of the reason why the prices are going down, because it was at the time it was being priced in that it's guaranteed we're getting rate cuts. And now those probabilities are slowly starting to shift into no rate cuts. I think when I looked this morning, it was like 13% chance of no rate cuts. And that will probably start to sway more and more onto the side of no rate cuts. And I think Jerome Powell is speaking. Let me quickly pull up on another screen over here. Just give me a second, guys. Let's quickly pull up that economic calendar, just see exactly what is coming up. What have we got coming up today? We are on Tuesday. We have some Canada data. Markets obviously mostly interested in US data, so nothing over there. We have, there we go. So it's going to be on Wednesday, FOMC meeting minutes. So we'll see. That is going to drastically affect the probability of a rate cut or not. So we will cross that road when we get there. Wait for Wednesday. But if the meeting minutes come out as incredibly unlikely of a rate cut, that's what could cause that flush down. The market will price in, oh my word, no more rate cuts, where everybody thought that there was going to be. Prices will come down, reset, and they'll get over it. And then you'll start to set in possible high lows in those demand zones. Okay, and there's quite a lot of data coming out this week. We also have on Thursday the manufacturing PMI that's coming out for the US. Friday, we have Jerome Powell speaking. And then we got that Jackson Hole. So prep your hole for Jackson Hole. It's coming up. Butthole is on the way down as well. So if that is a sign of what's to come next, then you know, 6% down. There we go. Butthole back to 0. Butthole back down to new lows, guys. And Jackson Hole's on its way. Okay, cool, guys. We have covered, I would say, just about everything. We'll check for a couple of final requests over there, but I think I've given you the overall plan. Don't fade these bearish engulfing candles when they come on a high time frame. You've lost the 3 and 9 moving average over here, and what that means is it's calling for support, right? Once you've lost that level, you're calling for support. Support is 110,000. Next support is, I would say, 100,000 is actually next support. You'll probably sweep through this level and then close. The wick will come down to about 99K, and you'll probably end up closing that high time frame candle back at about 105, and that will be a strong sign that you're putting in a major high low. If you don't, and you have a really bearish candle and you lose that, you know, you could be looking at all the way back down to the bottom of the parallel channel. But one step at a time. We don't need to worry about that. We'll go one step at a time. All of our trades are set here, ready to scale into the position. Everything is there. For those of you that haven't joined into Whale School, please, guys, you're missing out on a lot of value. Even if you've been to Whale School, come again in 13 days, because we're starting to focus more and more on very, very specific lessons relevant to the market. Okay, so everything is linked there for you guys. That is it from me. Thank you so much for joining. I'll see all of you on the next one, guys. Have a good day and cheers for now.